Welcome back, episode 27.
Great.
Lisa,
Awesome.
Keith, no Jeremy.
No,
What?
Jeremy.
Where'd he go?
A team today.
Wow. Exactly. About time.
Can we do it without Jeremy? That's the question here.
Yeah.
I guess we'll find
We'll
out.
find out. But even though he's not here, I figured I might as well keep with our sports theme. And there's a debate on this one, but I went with Big Papi, David Ortiz. Because when you look up famous sports players that wore 27, he was on the list and had a jersey with number 27.
He did, but I think he retired from the Red Sox with 34.
He
So, I
still
mean-
wore 27. But
All right.
I also had to throw Scott Niedermeyer out there.
There you go.
Just for hockey, just because we like hockey.
Yeah. For Jeremy's sake and a baseball guy, Mike Trout, he was
Yeah.
an all-star baseball from
Yeah.
the Angels, so that's
Angels.
27. So.
Yeah.
Mhm.
Yeah, anyway, some version of it, I think we have it covered.
Talking about hockey, did you see the Wild last night?
Yes, I did.
Lisa,
You watched?
come on
Yes,
now.
I need to step up my sports game here. I mean, excuse me, I can never talk to you about that. So,
Let us know
actually,
what
as a
happened.
matter of fact, I went to a sports bar yesterday with Gabby as well and my husband, and there was trivia going on. We didn't know that, and it was obviously sports related. We came in 4th place, so that was good.
Out of
Out of
four,
four?
yeah. Out of how many?
I do not mention out of 5. Okay, But we hung in there, and it was
We
the
hung in there.
but there was the Wilds game playing and the baseball, like
Playoffs.
Playoffs.
Yeah.
Yeah.
Cleveland versus Yankees and the Wild game. And why I paid attention to it, because there's an Austrian playing for the Wilds.
Really?
Yes, it's Marco Rossi,
Oh yeah.
and he I think they had 3-1. So they won yesterday, and one of
They
the
did.
goals was done by Marco Rossi.
Wow.
So yeah.
Looks like you had to go to the bar every night and do a little trivia.
Yeah,
when they're out there
Austrians
playing.
going big here. Yeah.
Well, there was also a goalie goal.
What?
Yeah.
I didn't see the highlights.
Wild's goalie got the empty netter.
Oh, he did.
Yeah.
Oh, the
that was
bus.
pretty cool.
Yeah.
So, yeah. So that was a fun game to watch. But
Cool.
how's everybody adjusting to the cold weather? That's the real question, Lisa.
So generally speaking, fall is my favorite time
Oh,
of
it
the
is.
year. I really love it. The colors here are absolutely stunning. It's just a little bit tough to kind of get dressed, because it's warm and then it gets cold again, and then it's warm and then it gets cold again. So it kind of switches a little bit back and forth. But overall, I don't know. I love to snuggle up and get cozy, and to say it with the words of famous George Costanza, a very wise man,
Oh
I
boy.
shift into soup mode. I love it.
Oh,
Yeah, it's definitely getting cold out. I mean, I don't mind fall, but it just kind of, I know when fall's here, then winter's right around
Yeah.
the corner. So
Yeah.
I don't really like, the other morning I got up at, I get up a little early. We have a new puppy the beginning of summer. And so I go out with him in the morning. He goes to the bathroom. I do a little walk with him to give him.
So you have
his
to, no
dog.
matter
My
what.
dog's name is Louie, by the way, Tyler.
Oh.
I don't know if you knew that.
I didn't
so,
know that.
Yeah,
Such a sweet name.
Tyler's it's a child's name as well. Lou.
No.
Leo.
Leo. Close.
Louis, close enough.
Close.
Anyway, taking them out is cold now. So I usually walk them for a half hour. I think now that's going to be ending.
Are there any predictions for what winter we get in Minnesota? I think there's a lot of talks out there amongst Minnesotans trying to predict, after such a mild winter, if we have like the horror coming.
I haven't heard the Farmer's
Or if
Almanac
it's
is kind
again
of usually
mild.
Yeah.
Tyler, what do you like this weather? I know it falls.
I
here,
love this weather.
right in your wheelhouse, right?
I was off. Yes, I was at home yesterday, and I was staining my pergola, and the weather was absolutely perfect.
Oh, too cold.
And then I was outside later that night, and it was nice, crisp, like 45, 50, I think, something like that. And it was perfect.
I love it.
So yeah,
Yeah.
I love this weather.
Yeah.
Anywho,
Yeah, anywho.
so my hot button is earnings season has officially begun. And earnings season is typically started with the big banks. Now there are other companies that report, but the banks are kind of the early indication of how the earnings season is going to go. We get commentary, especially from JP Morgan, who has Jamie Dimon, who is a very influential person.
Which is the biggest bank out there.
Yeah, JP Morgan is also the
size-wise
biggest
as well.
bank. But he usually gives his kind of thoughts on the economy, the bank, the markets, all of that. And people kind of read into it. But what I always found interesting with him, and you guys can tell me your thoughts on this, but people almost think of Jamie Dimon as like this market predictor, but that's also not his job. Like, he always comes out pretty, maybe not bearish, but very cautious usually. But his job is to be cautious because he's running the largest bank.
Yeah.
Right.
It's got to protect the capital.
So whenever he says something, inflation might go to 7%, that's the headline for the next week. Like, do you guys think that people just consider him in a wrong position?
No, I mean, he's the head of the largest bank, so obviously anything he says carries a lot of weight. I think he's just been more cautious, and I think that's due to the fact that he's running the largest bank, right? You'd rather have that than the other situation where he's, all rainbow and sunshine,
Right.
and then all of a sudden you get, stormy clouds. That was his other comment going back. Was
Yeah.
Storm clouds on the horizon, right? And that's a year and a
Yeah.
half ago, and I think that's passed, and it's been generally more positive. I think the surprise comment I think we got out of this time, I think he was a little bit more upbeat. I mean, certainly not like really upbeat, but for how he's been, I think so, which is, I think to me is encouraging. He talked, a little more positive on the consumer, which has kind of been in question lately. We've talked about on the podcast here several times of where the consumer's at, and they're kind of, pulling back a little bit. And obviously it's encouraging for me to hear that he's actually a little bit more positive on the overall consumer.
Yeah. During the call, he came out and said that he sees a no landing, not necessarily a soft landing by the Fed, but a no landing, and that employment or jobs are remaining strong, and that the consumer is still healthy, which he being the biggest bank, credit cards, checking,
he sees it, right?
I mean, he sees it, or he gets reports that see it.
Yeah, no. So he sees it. And I mean, he's not, if you ask, about his forecasting ability, I think he's going to be a little more biased to the downside. And then obviously JP Morgan's huge. They have a lot of strategists that actually have probably more forecast for bigger picture stuff than that we care about from the stock side of things and the bonds.
Yeah. So with that, were there any standouts from the banks? Lisa, I know you're kind of our resident bank expert, whether you like that or not. But in your opinion, was there anything interesting or that stood out?
I would not say something specific. I just would say, like, overall that it's better than expected, better than feared. And again, like, banks are important for earnings for us to get, because it's a while ago when banks report that we heard something about the companies. So they are the first ones, and again, give us an indication of how it may goes into other sectors, like how it progresses, because they have such a deep insight into business trends and consumer and other sectors, and kind of that gives us an indication of how the whole season may progress. But I would say overall, again, better than expected, it's holding up very well. And some interesting tidbits, especially from Goldman Sachs. They kind of pulled out of retail that hurt them, but they are doing very well.
Yeah,
and
they're
they
wealth
kind of find
management,
their
investment banking.
Yeah, right. So investment
trading.
banking is picking up again, still below historical averages, but it's picking up again, and it helps and get a little bit tailwind. It seems there's a lot of deals on the horizon, so that should bode well for the future. So I think that was overall.
I'm glad you brought up investment bank, because one thing I found interesting was Wells Fargo. I feel like a lot of people, it's a big bank, a lot of people use them, but I feel like from the investment community, they're not really talked about all that much.
No, not at all.
No,
They're
no.
definitely on the lower rung. It's Goldman Sachs and Morgan Stanley and JP Morgan.
Right. When you think of the big banks, you think of those guys. But Wells Fargo, I mean, they've had an asset cap for 5 years, 6 years now, something like that. On the banking side. But what I found interesting was they had pretty strong investment banking growth, and that's expected to continue. So do you think Wells Fargo is going to be the golden child of investment banking?
I don't know. No, I still think there'll be that second, third rung compared to the big guys. But I think part of the reason stock acted well is expectations were very, very low. I mean, that's the bank that hasn't executed on the banking side, right? They got themselves a little bit of trouble with mortgages and stuff like that, right? And I think they're finally still getting out of that. And to your point, the upside is on the investment banking. But Goldman Sachs, great numbers. Morgan
Yeah.
Stanley reported this morning, fantastic numbers as well. So I think the category is doing well, and
Mhm.
I think they'll do well, which is good for their business, right? I mean, that's the ultimate question. Is
Yeah.
it good for Wells Fargo? Yes. Are they going to eclipse, JP Morgan, Morgan Stanley? I don't think so. But I mean, it's still very good for them. So
Yeah.
and especially as you're distancing themselves from the bad mortgage business, of
Yeah.
2000.
I also saw a report for Wells that they're potentially petitioning to get rid of the asset cap now, which would be interesting. I don't know.
Yeah, you want to talk a little bit more about exactly? I mean, don't get too far in the weeds on.
Yeah, I mean, so obviously Wells Fargo got in trouble for a few different things, but the primary one was they were creating accounts for customers without them knowing, which is kind of an issue because there was a sales-driven approach for all their bankers. They were incentivized for opening accounts, and so they
open
just
and closing, right? So
they were just constantly churning the accounts, and their clients didn't know about it. So the OCC, basically, which is just the controller of the currency for big banks like that, and they basically said, because of this, we're going to fine you, and then we're also going to make sure that you cannot grow your assets, meaning you can't add more clients and checking accounts and banking accounts,
which is tough,
over,
right? I mean,
over a certain level, right? So if someone
grow.
leaves, they can add more people, but you can't continuously take on new clientele. So, which is hard for a bank when you're hoping to become a bigger bank, right? The goal of every company is to continue to grow. So if you can't grow that side of your business, it's from the investment community, it's hard to invest in a company like that because you know that they're not going to be growing.
You're Mr. Canada, as we established here, right? Isn't that?
Yep. So we just saw
same thing with another.
So Toronto Dominion Bank, TD Bank, they're the 10th largest bank for their U.S. division, but they're headquartered in Canada, one of the big five. And they had some money laundering issues, which I would say.
Lisa, is that a good thing, you think?
Money laundering?
I don't know a lot about money laundering.
It cost them over $3 billion, so I guess not.
Yeah, so they just were fined one of the biggest fine. I don't know what the next biggest fine was, but $3 billion seems like a stretch.
Mm-hmm.
But they're fined $3 billion, and they were placed on an asset cap as well, just like Wells Fargo. Yeah. So unfortunately, we own them in the G40I. But
no, I'm just, but the point being is, I think that just kind of limits some of the upside, right? And I think with the Wells Fargo example, we were just talking about that if they can lift that cap, that would be another potential catalyst for that name, right? And it's a name that, generally speaking, the names that I own in the names that travel in are JP Morgan, Bank of America. Typically, I own the higher quality, bigger banks. I feel safer with those, a little more diversified, even though that some of the growth profiles of like a Wells Fargo could be better now with investment.
There's still a lot of risk.
Yep, still a little more risk in them.
Well, I think also it when you look at Wells Fargo and asset caps, not that regional banks have this, but when we think of what banks we like the big money center banks because they have different revenue streams, right? It's not all bank driven. It's not all net interest income from the margins, right? It's investment banking, it's wealth management, right? That the other revenue streams, whereas when you get into the regional level and maybe the super regionals have some diversification, like US Bank has wealth management, but you get into the smaller regionals and it's all driven on loan growth, right? And that's the only way that they grow. And when you have high interest rates, it's hard to grow.
I mean, small companies, if you're starting out, it's more difficult, right? If you have to take a loan out at 3% versus 8-9%, you're just a little more unlikely to it.
So what banks do you own?
Yeah,
just because we talked about money centers, and I said that we like money center banks. So which?
Yeah, Bank of America, JP Morgan, they both reported good solid numbers, which is nice to see. Those are the two big ones I own. But then in my financial, I look at it as a sector.
Yep.
The other ones I own, which we just touched on as well, is the investment banking side of Goldman Sachs, a great company. Morgan Stanley, those are the names I own. Jeremy owns a couple other banks. The ones that we don't, or at least I don't own, is kind of the large regional. You kind of touched on some of the reasons why. The other thing is they have a lot more commercial, real estate loans, which in my mind, we talked on the podcast in the past of, there's one in Minneapolis that one of the buildings sold for like 99 cents on a dollar, right? It was down, so it was down 91%. I think there's a lot of other cities going to start seeing that. And I think if you're a bank that lent, to those lenders and they're just not going to pay, that's an issue, right? So that's why I prefer just to stay with the high quality, well-diversified banks. And then also I like the growth of the investment bank, wealth management, which is on the Morgan Stanley and Goldman Sachs.
Yeah, well, talking about that, like we had banking issues last year, right? Obviously Silicon Valley Bank, and those were kind of one-off things just because of who they lent to and that kind of thing. But from the commercial real estate side, we had New York Community Bank this year, which actually bought the assets of one of the default banks, and they had too much commercial real estate, and they fortunately were injected with $1 billion to help them stay afloat, right? So like, and that was earlier this year, right? So this is still ongoing, and there's still a lot of concerns from the regional side on that. So that's why, we like the big guys.
And they also, I mean, it's over 4,500 banks in the U.S.
Isn't that crazy to think about?
Wild.
This is wild.
Versus Canada has
a handful.
There's technically 6.
Yeah.
That really is it that?
Yeah.
How about in Austria?
It's also like more the big boys basically.
Okay.
Yes. So I worked for a regional bank for a smaller one, which was basically part of a bigger one in the background. So it was just not a subsidiary. We were like still kind of self-sustaining, but we had like the operational stuff from one of the big ones. So not that fractioned like here. And a nice I would say it's also not commercial real estate alone. It's also like the competitiveness. They kind of all compete with each other. They kind of cannot compete anymore. And I would say they need to kind of merge, and I think we will see a lot more about that in the next few years to kind of help them keep going. And then you have the bigger they are, the more capital requirements kind of so that's I think there's a lot of smaller issues there with I mean obviously it's not that bad, because when you look at the regional banking ETF, it was not bad this year, and it came back from last year, but still not as back up and still lags the overall index. But I would say it's just more important what you own in there.
Yeah.
Good.
Well, also, so I was out yesterday, so I couldn't update my stats. But so talking about earnings, we'll move off of banks here just because it's banks.
It's Tyler's. Yeah, it's banks.
Yeah.
Lisa. Sorry.
Anyways, so as of Monday, there's 110 companies in the S&P 500 that have already reported, which kind of seems wild because
seems like a lot.
Well, so part of it is, I think the way that FactSet breaks it down is like Delta's included, right? So like some of the stragglers that you would consider from last quarter, I think get grouped in, or if they're not necessarily on the calendar year. And so
I get it.
Yeah. So according to this is according to FactSet. So it's not my statistics. I'll trust FactSet over mine anyways. But 110 companies have reported, and 50 of those have reported positive earnings per share guidance, which if you look at the 5-year and 10-year averages, the 5-year history is only 41 companies doing it, and the 10-year average is only 37 companies at this point have reported positive earnings. So I think, in my opinion, that's a good sign for the broader market. But do you guys think it's too early to extrapolate what we've seen so far versus the rest? Because the rest is not what we've seen, right? They're very different.
Sector and industry.
Yes, they're very different. So do you guys think it's too early to kind of say that this is going to be a great quarter?
Yeah, I'll start. I think it's a little early to say that, but it's certainly encouraging. So I would definitely lean into the numbers that we've seen. JP Morgan, for example, that just touches every part of the economy, and they're very positive. So I assume that we'll start seeing that through other numbers that we reported. And I think another stat that I saw too is that the companies are beating by about 7%, which is a little bit above historical average, right? Most companies, if you look at the quarter at 7%, that sounds big, but it's like in actuality, I think it's like 3.5% is kind of the normal.
Mm-hmm.
So we're at 7%, so that's a good sign, but it's early yet, and it's been more financial focused, and we're starting to see some other companies reporting here this next week. We got like American Express and other financials, a big name reporting. But next week we'll start getting into some of the big tech names and those are going to be more important just because of the weights they have in the S&P 500. So that's a big driver. So when you're talking, 50, stocks beating, that does sound good to me, and it's beating by a little bit more than historical. So I do think you need to be a little more positive on it. But it's still how we manage, or at least how I manage a portfolio, is I don't go out and buy stuff right in front of a quarter. Generally speaking, I'd rather wait and see the number and then buy it if it's a story I really like. So even though we're seeing this upside that we've seen for the first part of the earnings season, I'm not inclined to go.
You're not just
change.
going to go start buying a bunch of stuff?
right before the report.
Yeah.
No, the risk reward levels
Yeah.
it's usually skewed to the downside, because if you buy something that doesn't work before the quarter, you
Yeah,
usually get more punished.
You're probably down 5 to 10%.
Yes, versus even a good upside gets you up a couple percent. So
Yeah.
in my mind, it's probably 2 to 1 on the downside risk of doing that. So we prefer to wait.
Yeah.
I mean, to your point, and we saw that in the last few quarters, that that companies get more punished than historically for not beating their earnings and not beating their revenues, and not only beating, but by how much, basically, because the expectations are so high. So that makes a whole lot of sense. What we saw, like the projection, what we saw over the last few quarters.
Well, going on that too, what's interesting is we haven't. So if you look at, typically going into the quarter, earnings are revised lower, right, by a certain percentage. But for the last couple of quarters, that revision hasn't really happened, right? So analysts aren't bringing their numbers down, which means that if the companies are beating and giving positive earnings guidance, it means that
they're taking the full.
They're beating on top of a number that wasn't already revised lower. So like if they normally beat by 3%, but those numbers were probably revised lower by 3%, right? So they came in line with where the analysts were projecting earlier in the season, and they just talked them down, or whatever guidance they gave the analyst to move numbers lower, and then just came in line.
Yeah, it's a funny game that analysts play and investor community play of expectations guiding down, and the companies generally, guide the next quarter out, and some will guide the full year out. And what do you think analysts do? Is basically,
and I mean, companies are interested in beating their earnings.
Yeah, so they want to give conservative guidance.
Yeah, right.
And so going into the quarter, they might be talking with the analyst. Oh, these numbers might look a little high, or this area might be a little weak, and the analyst starts bringing numbers down, and then they come in where the analyst originally was, just to beat. Right.
So it's kind of like I said,
it's a game. But I just find it interesting that numbers haven't been revised down as much as they historically have been, and they're beating up. The companies are beating above what they historically do. So I think, in my opinion, that's a good sign. Again, to your point, we probably can't assume that the rest of the quarter is going to go this way, but I think it's a really good sign.
Are you changing any of your decisions of running out and buying anything in front of this?
I'm not. Mine are a little different too.
You're probably a little more risky than I am.
Well, personally, yes, but like international is a little bit different too, because a lot of the companies don't do full quarter releases. Like a lot of the companies will do a semi-annual, but then they'll do what they call a trading update, where they'll give you like the top revenue numbers of the different segments, and that's really about it. So it's hard. You don't get a lot from these interim quarters between the semi-annuals, right? So it's a little bit different. But yeah.
No, earnings will be, we'll see. Like I said, Netflix report, as a recording, they haven't reported, they report, the next day. That'll be a big one. I think that touches the consumer, that touches technology. That's been a good stock. That's kind of not in the Magnificent Seven, but I would put it right next to it. So it'll be I think a key indicator of, multiples not cheap. It's a good growth company, and see if we start seeing some more rotation, right? When we're starting to see that last few days, small caps are peeking its head up again. Tyler likes that when that happens. So we'll see. I mean, we've been talking about the broadening out of the market, and maybe we've seen
it with the value, but just it hasn't gone into the small cap yet.
Yeah, maybe we're starting that.
Yeah. All right. We've talked enough earnings, so let's have a little bit more fun. So my wait what today. So this was actually a Keith idea. But streaming platforms in sports. And I actually experienced this weekend, or I guess late last week, with the Wild. So more streaming platforms or sports, I would say, is becoming the new content for these streaming platforms, like the Netflixes, the Disneys, right? Like they're spending money
on live sports rather, and maybe they're still creating some content, but not as heavily as they were
couple of years ago. It's all focused on live sports. So for football alone, it feels like you have to have 5 different. If you want to follow one specific team, it feels like you have to have 5 different freaking streaming platforms.
It's crazy, isn't it? I mean, you used to be able to, throw the rabbit ears on your TV, and you had your 3 channels, and you got all the NFL games you wanted to see.
So like this Thursday night this is for the NFL. Thursday night, Amazon Prime. Early Sunday game, you have to have the NFL Network, which is the London game.
Mm-hmm.
The late Monday night, you have to have ESPN Plus. Right? Yeah. So just to watch 3 games alone, that's 3. And then if you're out of network, you have to have NFL Plus or Paramount Plus if your team is out of network. And now Netflix will have the Christmas game.
Yeah, that's what I found interesting, right?
So
it's amazing, especially if your team, because I think they try to rotate them through the different venues, whether it's international or Monday night or Thursday night, right? So it's not like it's the same team on those nights. So your team may, our Minnesota Vikings have already played a couple of these different. They played a Monday or a London game. Already,
I couldn't watch it.
Yeah, no.
Granted, it was earlier in the morning, but I just listened to it on KFan because
really?
Yeah, I couldn't watch it.
Oh man.
So yeah, it's just interesting, and I'm curious of your guys' thoughts if this continues this way, or if you think that there's going to be some. Is there any way for these guys to aggregate so you don't have to have all of these?
Put the bundle back together?
Yeah, I mean, and I know they're kind of doing it, like Netflix. I think.
Well, Hulu's kind of trying with Hulu, Disney Plus and.
Yeah, but then
ABC
there's
content.
also like I think there's like a Netflix plus something else combo through.
Yep.
I don't know.
It's one of the providers, right?
Yeah.
Whatever it is.
Do you guys think that this trend continues?
I think the content of live sports certainly is, because that's one thing you can't replicate, and that's
that's
just the dollar value of what owners are paying for teams, and the transactions happening, and the viewership is off the chart, especially for the NFL and NBA. That's why they're offering these things, and all of a sudden you hear Netflix getting a NFL game on Christmas. That just seems odd to me. But Netflix is the content king in the streaming war. I think they've won that already. But what are they missing? It's live sports. So I think they're dipping their toe in and seeing what's going to cost and how much that's going to help them or hurt them if they don't do it.
Well, so my issue was I was trying to watch The Wild, and the only way in Minnesota to watch The Wild is if you subscribe to Bally Sports. And the only content that Bally Sports has is the Timberwolves and the Wild. And you have to pay $20 a month for it. So they had a 7-day free trial. So I opened that up. So I have to cancel it today before they charge me $20. But that means I probably won't get to watch the Wild the rest of the season, unless if like last night they were on ESPN.
Yeah, no, I'm a huge hockey fan, and I did that same thing last year, and I bought a year subscription, and then now it's expired right before the season started. So I haven't seen any of the games because I refuse to do it anymore because of that. It just can go away anytime too, because they're not financially very sound. So so I'm like, it's frustrating because I'd like to watch hockey, and especially it's a little early for me. Usually when it's more winter, that's sit in front of the fireplace and watch a little Wild up in the north. It's good, but so I don't know what. So that's why I think if you talk about popular sports, it's NBA and NFL, and then all of a sudden baseball's becoming regional.
And you have interesting stats about this, so I'll let you, if you can read.
Sure. No, I just the hour. No. So it's just the hours. What you pay the content providers are charging per hour of sports, right? So NFL, what sport, Lisa, do you think would be the top? What content providers that you have to pay for NFL rights or NBA rights, or what do you think are some of the top sports?
I don't know.
What do you think is most popular?
I would say football.
Yeah, NFL. I think it's almost
must be on top.
It's like $9.5 million per hour.
Per
hour, right? So then with next sport, just so you know, would be NBA, and that's down to I think it's like 7 million. So 9.5 down to 7 million, and then there's a big drop. Tyler, what do you think is the next sport? I mean, you might get this one because you're well rounded and.
So here's the hard part: is I would be biased to hockey just because we're we have a lot of hockey, and I'm not a big baseball fan, but other markets are, and you get different demographics that watch. So I would maybe go MLB versus NHL.
I would too, and it's actually NASCAR, right? It's like NASCAR. What? There's
See, that would never even.
No, and that's at 3 million. So you went from 9.5 to 7 to 3 million. it's and baseball was the next one at 2.5 million. So it's crazy. And then I know, and then your favorite, which Tyler's a young guy, so F1, right?
Yeah.
So that's next. I mean, so hockey is like the 8th one at I think it's $1 million. So football's at 9.5. Hockey are paying $1 million per hour. And WNBA, which surprised me, is right on their heels already. So I think that's going to pass hockey. So
yeah, probably.
You think that, growing up, the major sports were, football, NBA, baseball and hockey, and hockey's getting relegated to, just cities that have or states that have hockey to watch it.
Yeah.
And it's certainly not helping the viewership when
you can't even watch them.
Can't even watch it. That doesn't help either. So.
No. Interesting.
So I know, I think those are just very interesting.
Well, and
stats.
that, to your point, that's probably why these guys everybody's bidding for NFL.
Yeah.
Is because it has the most viewers. It probably has 150 million viewers across the weekend, something like that, right? Like, it's a lot. To generate some ad revenue or subscriptions, and people are hoping that you subscribe your $6 a month and then forget about it.
Yep.
Right.
Tyler won't forget though.
Nope.
But it's interesting without being too much into the weeds with different subscription and sports and all of that. But when you zoom out a little bit and when you look at that, and also with the Netflix, for example, and Amazon introducing like the ad tiers, you have to pay a little bit more to not see ads, breaks and stuff. It reminds me a little bit of cable, right? So we've come a long way with all of that. But it seems that
it's slowly full circle, right?
We slowly go back to it.
Yeah,
I don't know. Yeah,
we broke away with the streamers. Now Tyler's point, we're kind of rebundling.
Now
and
someone's gonna come out with a service where you pay $30 a month and it'll subscribe. You pick and choose which services you want. You'll bundle them back together.
And then we're back with cable.
Back where we started.
But we were also talking about NFL for all those things. But like if you throw in soccer, like MLS here and you have to have Apple Plus, right? Like there's so many different, even if you don't watch the NFL, there's other sports that you have to have these subscriptions for. Hockey, baseball. I don't even know where the Twins are. I don't even know how you can watch the Twins because they don't have a deal with Bally Sports anymore.
Yeah,
so
it's awful.
I don't even know how you watch the Twins on TV. But
unless your cable provider still has that,
right?
But most people have got rid of the cable,
yeah,
right?
Exactly.
To the streaming services. Now you're kind of stuck.
Yeah. It's a challenge, but it is funny though, Lisa, that we're full circle. So, all right, we'll leave it there. We'll see you next time. Maybe Jeremy will be back and
we'll see. Maybe Lisa will make him get sick or something. So
yeah. All right. We'll see you guys next time.
you think?